In this video, we'll share the reasons why we think the Australian dollar and the Kiwi dollar can offer some great trading opportunities this week. Hi guys, and welcome to the video. This week 8 video will cover the trading week from the 27th to the 31st of May 2019. Now our main focus points for this week will be a possible trading opportunity on the Australian dollar with some very important economic data due, and we also have a possible trading opportunity on the Kiwi dollar with the RBNZ releasing their financial stability report this week. Let's jump to the video and see why these two events will be important. Our first focus point for this week will be a possible trading opportunity on the Australian dollar. Now, at their previous meeting in May, the Reserve Bank of Australia left their interest rate unchanged at 1.5%. They lowered their GDP forecast for 2019 and 2020 and once again explained that their criteria for a rate cut is falling inflation as well as rising unemployment. Now, last week, the RBA Governor Philip Lowe gave a strong indication of a possible monetary policy change in June, saying that the bank will consider the case for a rate cut at the meeting. Now, apart from that, the escalation in the US-China trade war over the past 2 weeks has also been weighing on the commodity currency and should continue to do so if there is no progress made on the trade front. Now, this week, we have two very important economic data points to consider for the AUD, which is building approvals and private capital expenditure. Now, the reason why these two are of significance is because they are two very important inputs for quarterly GDP. So if we see a big miss on either one of these two numbers, it can provide an opportunity to short the Australian dollar into the quarterly GDP release next week. Now, from the calendar, guys, we can see that the markets are expecting building approvals for April to come in at 0.0% from a prior of negative 15.5, and for capital expenditure to come in at 0.5 from a prior of 2%. Now, the best case scenario for a shorting opportunity, guys, will be a miss on both the building approvals as well as the capital expenditure. Now, the second focus point for this week is a possible trading opportunity on the Kiwi dollar. Now, the RBNZ cut interest rates at the monetary policy meeting in May, which would normally have heeded a bearish bias for the Kiwi dollar. However, following the press conference at the May meeting, RBNZ Governor Orr stated that we are in a good position to observe data as the situation unfolds. So this basically means that the RBNZ will be in a wait and see mode and makes the bias for the Kiwi dollar more neutral than bearish. Thus, if economic data improves, that should be supportive for the Kiwi dollar, and if economic data disappoints, that should put pressure on the Kiwi dollar. Now, this week, the RBNZ releases their financial stability report. Now, this is also followed by a press conference by Governor Orr, as well as another testimony on this report later the same day. Now, if the report comes across as bearish, guys, that could tilt the bias for the Kiwi dollar more to the bearish side once more and should put pressure on the Kiwi dollar in the short term. Now, with the recent trade war escalations and fear surrounding global economic outlook, the Kiwi dollar has really been pressured along with the Australian dollar, and a negative financial stability report can add fuel to that fire and provide a great shorting opportunity this week. So now that we understand the fundamental reasons for why we are looking at these specific currencies, we can move on to the charts and look at the technicals. Now, we'll follow the same technical process for every chart we look at in order to ensure that we stay consistent in our methodology. Now, in the case we have a big miss in Australian building approvals and capex, we could look to pair something with like the Australian dollar with the yen, which has remained well supported with all the recent trade war escalations. And then if we see a negative financial stability report from the RBNZ, we could look to pair something like the Kiwi dollar with the yen for the same reasons mentioned above. So moving on to the charts and looking at the AUD yen, we can see that the pair has broken through a very significant support area at the 77.50 price level. Now, in case of a big miss on the Aussie data, we could use this support level, which might now act as a resistance zone, as a high probability area to look for a possible shorting opportunity on this pair. Now, we can see from the chart, if we draw in our Fibonacci from the daily swing high to the swing low, that we have confluence with the 38.2 fib as well as the 0.7050 level and that previous daily support area that we can see on the chart. Now, in terms of a stop loss, guys, the safest place to anchor our stop would be above the previous daily swing, which would be just above that 81 handle. But at 300 pips away, it might be better to look at something a little bit closer. So we can look to this minor swing area we see over here, which will be just above that 79 handle. In terms of a target, if we use the 100% fib extension, we could look to target something close to that 72 handle. And then moving on to the NZD yen. Now, this could be a possible trade if we see a very negative financial stability report or a dovish governor or. Now, what we can see from the chart, guys, is if we draw in our Fibonacci from the swing high to the swing low, that we do have confluence with the 38.2 fib, as well as that 73 psychological handle, as well as this cluster of previous support that we can see on the daily chart. Now, in terms of a stop loss, the safest place to anchor our stop would be above this daily swing, maybe even higher over here, which would put it right above that 77 handle, but that is a bit far away, so this minor swing area over here, just under that 75 handle, could be a better option. Now, if we use the fib extension tool once again, guys, we could look to target something close to that 70 handle and rather use the 61.8 instead of the 100%, taking into consideration this major swing point we can see on the charts. And that's the end of this week 8 video, guys. We want to thank you for watching, and we want to remind you that these videos are designed to help you to think and approach the markets like a professional trader. As such, it's important for you to realize that we don't need to fear the red risk events in the markets like this week's important data, as they can be some of the best opportunities to trade the forex markets. Also, guys, remember that these trade ideas are based on incoming data we receive every day, and it can change from session to session, so make sure to pay close attention to that market moving news as it comes through on your news squawk on a daily basis. We wish every one of you a profitable trading week. Until next time, cheers.